What's up traders, Tom here with another video. Every quarter, stock market managers must rebalance their portfolios. With the volatility and wild swings that have happened on the S&P 500 and Nasdaq recently, we are about to see one of the biggest ever. What does this mean to you? Stay tuned. Today we'll be talking about the latest stock market news and looking at the S&P 500 and Nasdaq from a technical analysis standpoint, as well as covering gold and the recent breakout that we've been looking at on this channel. Where to next for gold? And if you missed it, what are your opportunities? We'll be looking at that today on this video. If you haven't already, why not consider subscribing to the channel and hitting that alert button? And of course, if you do enjoy our videos, make sure to give them a thumbs up and help support the channel. Just a quick shout out as well, we are doing a Q&A session soon as a video, so if you have questions for us, put them in the comments down below and we'll answer them as best we can. We'd like to make that an ongoing series to help the trading and investing community with some of our experience. So nothing says cheap to borrow like Austria's latest century bond. We have a 100-year bond at less than 1%. And that seems insane to me, but it is the reality of the cash economy we're currently in. It looks like this 100-year bond will yield around 0.88%. And if we compare it to the previous bond in 2017, which expires in 2117, it started at 2.1%, but that bond went as low in March as 0.4%. So it is some incredibly cheap bonds in terms of they're not paying much yield, and this shows you what the expectation is over the next coming decades and in fact century. We could be in an incredibly low interest rate environment for a very, very long time. Speaking of low interest rates, we do have an important piece of data coming out tomorrow night. We have unemployment claims, which has been a key figure, but we also have final GDP for the US. And depending on what number this comes in at, it can make a substantial difference and volatility is expected to spike. Now, if you're not aware of these things, make sure you get a calendar. And in terms of the time that you're seeing here, this is Australian Eastern Standard Time. So make sure you set the calendar to your time frame so you know when the news is coming out. So there's a wave of selling estimated to be in the billions that's about to hit the stock market. In fact, next week marks the end of the quarter, and it's been a pretty turbulent quarter, that's for sure. So as the June ends, it looks like things like asset allocators such as pension funds could be taking big gains from the stock market and being forced to move them into bonds as part of a rebalancing act. There's a wide range of views on how much selling could hit the stock market, but some strategists, of course, are saying that the resulting move could not be as big after all as expected. I'm thinking it's probably going to be pretty large. I mean, these numbers say 35 billion to 76 billion, and Wells Fargo is estimating the rebalancing into bonds could be the largest in 6 years. But with any little bit of information kind of sending jitters through the stock market right now, this could be one of those things that has that little bit of a kick where you see a little bit of shorting. And if that's at a key zone already, it could be the thing that pushes it through. It's obviously not going to be the main trigger though, but it's something that you should be aware of. And you also should be aware of a concept called window dressing. So window dressing is a strategy used by mutual funds and other portfolio managers near the year or quarter end to improve the appearance of funds performance before presenting it to clients or shareholders. Sneaky managers indeed, trying to make figures look better than they really are. Who would have guessed? So in Australia, and this is for the Australian people that watch this channel, we have a different financial year to America. Obviously, our financial year ends on the 30th of June. So the window dressing and all of the heavy kind of transfers actually come into the end of June, and that's where you see some big rebalancing effects happen. You need to be aware that that happens in the big stocks here in Australia. Different market, slightly different nuances in terms of trading and investing. In the US market, of course, the end of the calendar year is the most important, which is also the financial year, but window dressing addressing is a key concept, and we'll cover this more in the channel over time. So comes as no surprise that some investors are making the biggest bet against the stock market in 9 years, and E-mini S&P 500 futures are growing at massive levels in terms of net short positions. It's as high as it's been since 2011. Now, short positions are usually seen as a bit of a contrarian signal for the market, and you usually see markets continue to rise. It's always been my opinion as well that when you see too many shorts, it usually means the market will keep rising to steal all of that money. But it could be the difference this time. I don't think so. I think it'll be another catalyst, but it's interesting to see how many open short positions there are. Obviously, many people are trying to bet against the trend right now. We want to see change of trend on the price action on the larger timeframes before you would consider doing some move like this. Unfortunately, many people have been hurt already trying to short the market as the Fed controls it quite a lot at the moment. So onto the S&P 500 technical analysis. Well, the S&P 500 remains trapped between our 31 kind of 55 zone with the bodies up here and below at around that 30 kind of 70. Remember, this was a gap up during that day. We still have those major traps at 29.50 and 32.31. So if the market breaks above, we still expect the market to try to fill the gap to the resistance here. Profit taking from traders, not investors, traders taking profit at these levels, and we'll see a little bit of weakness at this level as well. So in general, the market will probably hover between this zone, and if it breaks out to the upside, we'd see something like this, which we spoke about yesterday. And if it breaks out to the downside, we'd see it try to retest these lows. Now, if it can get through the 29.50, we've spoken about how bearish that signal is going to be. And if it gets through the previous highs up here, it really is signaling all the way back to the peak again. So there are some very key areas coming up for the S&P 500, and we're pretty much trapped in the middle of both those zones. So there's trading opportunity, but investing opportunity, if you're not already in it, we're in no-go zone really right now, unless you find quality companies at an affordable price that you want to get into. What about the Nasdaq? Well, the Nasdaq has made all-time highs again. We're starting to see some pretty crazy valuations. We've got Apple at 366, could have hit 400, possibly. We're talking about the market likes to stop at key psychological zones generally, and the Nasdaq is in a very strong bull trend. Remember that 20 EMA remains the key signal for the market to get down under, and the key real signal is for the market to take out the lows here at around 9,500 before you could say it's in a bona fide short trend. At this stage, very long still, and it's hard to bet against these tech stocks. There's no doubt they're going to make some pretty good profits. The question is, are they valued fairly? And some people would definitely argue they are not. On to gold. Gold has broken out. We spoke about this breakout. It has continued strength, and now we're seeing a bit of weakness. I guess it's a good thing if you're a gold trader and you haven't been in gold yet. Basically, you're looking for a role reversal. You're looking for the market to sell off after that nice bullish movement, come back down to probably at least this 17 kind of 58 area. See if there's a rejection here. There'll be a 20 EMA at the same time as it probably reaches here. If you see a bullish hammer, if you see a double bottom on the smaller time frame, a change of trend in the direction forward. Remember, if we get something like this, which is a change of trend, let's say on the 1 hour or even on the half an hour time frame, then all of these are bullish signals in the direction of trend. So they're the types of things that you're looking for when you're trading role reversal from a technical analysis standpoint. It's a nice breakout from gold. It had that strong move, but as always, there is always that trap, and this kind of weeds out a lot of the retail traders. You've got to have faith and conviction in your trading opportunity, and of course have the correct stop losses in place when you're trading things like this. So I guess it remains that gold will go up over time. There's a high expectation that it will probably go back to the 1790 area. If it gets through 1800, it will gravitate towards 1900, and obviously if it gets through 1900, it will strongly gravitate towards 2000. But I would say if you're looking at 2000, you would want to take profit before 2000, because everyone's going to be taking profit at 2000, and that is not a level that you want to see. You want to be just before that. You always want to be just before where everybody thinks it's going to go. It's a key idea in all of trading and investing in the stock markets and other instruments. So as it remains, the most important index of them all is the S&P 500, but it is always the main market. We were looking at futures before. Always look at what the real stock market does during the real volume of trade. The S&P 500 is the one to watch, and it remains the key signal for all indices around the world. We'll be watching everything. I watch the German 30, I watch the FTSE 100, and if I see good signals on any of them, I'll always talk about it on this channel. But for now, it's the S&P 500, and that's the one we're watching. We hope you enjoyed this video today. If you did, remember to subscribe and hit that bell. Give the video a thumbs up and help us with the algorithm. And remember to send those Q&A questions in the comments down below. Happy trading, everybody, and we'll see you in the next video. Bye.